OP Financial Group had a strong beginning of the year 2024 despite the challenges in the economic environment. In Q1, our operating profit totaled at 680 million euros, improving by 29% year-on-year. Our total income grew by 13% and total expenses decreased by 3% year-on-year. The loan portfolio and deposits both decreased by approximately 1%. All our three business segments performed well. In retail banking, operating profit grew by 44%, driven by increase in net interest income. Also, the earnings in corporate banking improved clearly by 40% year-on-year. The earnings in insurance improved by 31% from a year ago, largely due to the good result in investment income. Our CET1 ratio continued improving to 19.6%, which exceeds the minimum regulatory requirement by 7.3 percentage points. When we look more closely on the year-on-year change of our P&L items, we see that OP Financial Group's net interest income continued to support the operating profit as it grew by 24%. Net commissions and fees decreased by 11%, mostly due to the previously announced benefit for our owner customers of zero monthly charges for their daily banking services. The insurance service result totaled at negative 10 million euros, attributable to growth in claims expenditure. In early 2024, claims expenditure grew because of several large claims and claims due to frost damage, as well as active use of health insurance. OP Financial Group's investment income grew by 19% as a result of the increase in the value of our equity investments. OP Financial Group's costs decreased by 3% year-on-year, the key reduction being the fall of 62 million euros in stability contributions. Our cost-income ratio improved year-on-year to a very good level of 43%. Depreciation and impairment loss decreased by 29%. Impairment loss on receivables was 39 million euros in Q1. The ratio of impairment loss on receivables to loan and guarantee portfolio was 15 basis points. Despite higher interest rates, our home loan customers have been repaying their loans on schedule. The number of loan modification applications was lower than a year before. Following the deterioration in the construction and real estate sectors in 2023, the situation regarding customers in these sectors remained difficult in the first quarter of 2024. The weak economy led to another slight increase in expected credit loss provisions and non-performing exposures, but these were moderate in historical terms. OP Financial Group's CET1 ratio improved to 19.6%. This exceeds the minimum regulatory requirement by 7.3 percentage points. Our strong capital position makes us one of the most financially solid large banks in Europe and provides security in uncertain and often unpredictable business environment. OP's funding position and liquidity continue to be stable and very strong. At the end of reporting period, our liquidity coverage ratio was 199% and net stable funding ratio was 130%. So to summarize, OP Financial Group performed strongly in the first quarter of 2024, and we are in a good shape and ready to support our customers. We expect our operating profit for 2024 to be at a good level, but lower than that for 2023.